Dividend aristocrats are among some of the most consistent dividend payers in the stock market today. In fact, the only thing more consistent is a dividend king. Right now, there are roughly 65 dividend aristocrat stocks. How do you become a dividend aristocrat, you might ask? Well, first off, you need to be a member of the S&P 500. You also need to have a market cap of $3 billion or more. And lastly, and most importantly, you need to be paying a growing dividend for at least 25 consecutive years. When it comes to the Dividend Aristocrat list, many of the stocks that you won't find on this list are ultra growth stocks, companies that must reinvest every single dollar back into the business, or companies that may not even be turning a profit right now. Now, the companies that you will find on this list are going to be more mature companies, cash flowing companies that are able to return money to its shareholders. As such, in today's video, we are going to take a look at 3 high yield dividend aristocrats for you to consider adding to your dividend portfolio. With all 3 of these dividend stocks that we're going to look at today, not only are they all increasing their dividend, but they're all trading with a dividend yield of roughly 5% or more. If that sounds exciting to you, let's jump into the video. Hey everyone, Mark here, back for another video. If this is your first time joining us, welcome. Here on this YouTube channel, we talk everything dividend stocks. We are a growing community of like-minded investors that are looking to build passive income. Also, if you're new to investing or looking for a great new platform, then definitely check out Webull. They are running a special promotion right now where if you sign up for an account and deposit any amount of money, you can get yourself 12 free stocks valued up to over $30,000. Definitely take advantage of this promotion. The link is down in the description below. With that being said, let's take a look at these 3 high yield dividend aristocrat stocks. The first high yield dividend aristocrat we're going to look at today is Walgreens Boots Alliance, stock ticker WBA. Walgreens Boots Alliance is not only a retailer, but they are a pharmacy as well. They are a close competitor to that of CVS. The company currently has a market cap of $28.75 billion, and year-to-date, shares of WBA are down nearly 40%. The company is in the early stages of a turnaround story under the new leadership of Rosalind Brewer. Mrs. Brewer has been the CEO of WBA since 2021, but prior to that, she had experience as the COO of Starbucks. Many saw Miss Brewer as a potential CEO candidate for Starbucks, but prior to getting that opportunity, she saw the opportunity here at WBA and jumped on it. Peak to trough, shares of WBA have gone from $55 all the way down to $30. Even with high inflation, WBA just announced solid earnings. Their earnings per share came in at 80 cents adjusted. Analysts were looking for 77 cents, so a beat on EPS. In terms of revenue, the company reported Q4 revenue of $32.45 billion. Analysts were looking for $32.09 billion, so a beat on the top line as well. In terms of sales over the past 12 months, the company reported $132.7 billion, which was roughly flat on the prior year. Operating income came in at $5.1 billion, up 1.2% year over year, and adjusted EPS for the entire year was $5.04, good for a 3.4% increase year over year. In addition to earnings and revenue beating analysts' expectations, Walgreens also provided positive 2023 guidance. Management is expecting adjusted EPS in the range of $4.45 to $4.65. Although this would be a decrease from the current year's EPS, the company knows that it's continuing to face tough comps due to a large drop-off in vaccinations. Walgreens CEO Roz Brewer acknowledged these tougher economic backdrop, but said that the company is in a good position. Unlike big box retailers, she said that the drugstore chain does not depend on the sale of big ticket items, and it has also expanded alternative revenue streams, including its advertising business. So while the headwinds are evident, the stock is trading at an extremely cheap valuation. And on top of that, now has a high dividend yield. Speaking of that dividend, the current annual dividend is $1.92 per share. That equates to a dividend yield of 5.8%. Nearly 6% dividend yield is quite astonishing. The payout ratio is low at 38%, and the company has increased the dividend for 47 consecutive years and counting. Speaking of valuation, the current price to earnings ratio for shares of WBA is only 6.6 times. And over the past 5 years, the company has traded closer to 9.6 times. The second high yield Dividend Aristocrat stock that we're going to look at today is Realty Income, stock ticker O. Realty Income is the gold standard when it comes to REITs, or real estate investment trusts. In fact, Realty Income is one of only 3 REITs that is on the prestigious Dividend Aristocrat list. The company is a net lease REIT with a market cap of over $34 billion. On the year, shares of Realty Income are down roughly 20%, and much of that was really lost in the past 3 months. However, Realty Income has an A-rated balance sheet, a strong management team, a strong portfolio, and a sound tenant group. Speaking of tenants, let's take a look at some of the top tenants in the Realty Income portfolio. They include Walgreens, which we just looked at, Dollar General, 7-Eleven, Family Dollar, FedEx, LA Fitness, CVS, Walmart, Tractor Supply, Home Depot, and Kroger, just to name a few. You can also see the tenant base is very well insulated from e-commerce. The top industries include groceries, which makes up 10.5% of annual base rent, convenience stores make up 9.2%, and dollar stores make up 7.4%. In fact, 60% of the top 50 tenants are investment grade quality. Realty Income has weathered many economic backdrops over the years, and in doing so, they have managed to increase their dividend for 25 years and counting, and now trade with a very high dividend yield. The current annual dividend rate is $2.98, and I must mention that this company is a monthly dividend payer. They pay a dividend each and every month, so much so that they coined themselves the monthly dividend company. That current dividend equates to a yield of 5.4%. So again, we're seeing a dividend yield over 5%. And as I mentioned, they have paid a growing dividend for 25 consecutive years and counting. So not only do they have a high yield, but they're also trading at a great valuation right now. The current price to AFFO, remember this is a REIT, so we do not look at EPS. Instead, we look at adjusted funds from operation. Think of it similar to that of operating income. But the current price to AFFO is 15.2. Looking on a forward-looking basis, that equates to 14.3. Over the past 5 years, shares of Realty Income have commanded a price to AFFO of 19.5 times. So you can see that they are trading well below their historical 5-year average. The third and final high-yield Dividend Aristocrat stock that we're going to look at today is Rowe Price, stock ticker TROW. Rowe Price has by far had the toughest sledding here in 2022, with shares down on the year nearly 50%. The company currently has a market cap of $22.2 billion. Rowe Price is an investment management firm, and much of their performance is tied to the performance of the stock market. As you can imagine, the stock market has performed quite negatively, and on top of that, many investors have been taking their money out of the stock market, which reduces the AUM, or assets under management, for Rowe Price. They get paid a percentage based on how much you have invested, based on their assets under management. So when the assets come down due to negative stock performance and folks are pulling money out, it's a double negative for a company like Rowe Price. The stock market has been struggling, the Rowe Price stock has been struggling, but still the company continues to weather the storm. They not only have a strong management team that has been here before, but they also have a fortress balance sheet with absolutely no debt on it. The markets are expected to remain choppy, but this also allows me to accumulate more shares in a company like Rowe Price. Not only are they a great investment manager, but they're also an awesome dividend growth stock. Currently, Rowe Price has roughly $1.34 trillion of assets under management. And on top of that, the company has over $2 billion of cash on hand, putting them in a great spot financially to weather any choppiness we see in the economy moving forward. And this also leads me to believe that with shares of Rowe Price, we are much closer to the bottom than we are the top for this particular stock, providing me with the opportunity to add to this high quality dividend growth stock with a great balance sheet. Rowe Price has paid a growing dividend for 35 consecutive years and counting. The company currently has a dividend yield of 4.9%, so just on the edge of 5%. They have a payout ratio of just 42%, leaving plenty of room for continued growth in that dividend. And the 5-year dividend growth rate sits at nearly 16% per year. In terms of valuation, the current price to earnings multiple is 11.5, and over the past 5 years, Rowe Price has traded at an earnings multiple of 15 times. So again, you're seeing a steep discount on a great company like Rowe Price. So there we have it. 3 high-quality dividend aristocrats trading at cheap valuations, and all 3 of them currently have a high dividend yield. Let me know down in the comments section below, do you own any of these 3 dividend aristocrats? And if not, which of these 3 is your favorite or highest on your watch list? Let me know down in the comments below. Also, if you enjoyed the video, then do me a huge favor and click that thumbs up button, as that is huge for the growth of this channel moving forward, and I truly appreciate it. With that being said, we will see you next time. Take care.